called 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com and Amana Capital. And in the next 600 seconds,
My name is Alejandro Zambrano, Chief Market Analyst with
key markets such
TradeCaptain.com
as the
and Amana
EUR
Capital.
dollar, Bitcoin.
And in the next 600 seconds,
my
name is Alejandro Zambrano, Chief Market.
Good. I can see that we are live. So guys, thanks so much for joining me this morning, and as well, sorry guys to keep you waiting. So let's begin, and we're gonna begin with the euro. So this is the euro versus the USD, and you might remember, or might actually just look here at the chart on this 4-hour chart, that the euro bounced from the buy zone that we had highlighted here for many days, and I think it made sense for the market to bounce here because if you look at it from a bigger picture perspective, the price creating higher lows, and the idea is that maybe somewhere around here, traders will create yet another low, pretty much like this one or this one, before heading to the upside. So we saw a nice reaction. Unfortunately, though, the price didn't remain for too long up here, and I have a feeling it's gonna try to test the stops that are just below this level, and I suspect the market might actually
Here, and I have a feeling it's gonna try to test
to the downside. So we might actually slip below this level, and maybe in worst case maybe reach maybe 118.90, if not 18.60 in worst case. But as long as trade above 118.13, which is this level down here, I suspect that the market will try to bottom out here and then eventually reach this high. But the way it looks right now, it looks like it's going to take another day, sorry, maybe 2 to 3 days before this actually happens. So that's my outlook for the euro. For Bitcoin, it's under quite a lot of pressure. In fact, all markets are under pressure. Not all, of course, but most of them. And I think it's just something that is just part of the process here of investing in cryptos and pretty much everything else, right? Now the idea was to go long here a few days ago around 114, or sorry, 14,000, and then when the market moved up, we said 14,690, but the stop pretty much remained the same. And for now, it does look like maybe the market will continue to converge here, but as long as you trade above 11,919, I think it makes sense that this market is going to head to the upside. If we break below, and if we get a sustained close here, I suspect the market might drift to the downside. But be careful, because we always have these kind of big sharp declines, but the market is very keen on buying. It's not a market where I would necessarily sell. I would definitely not sell. I mean, in fact, if you try to trade on the exchanges and things like that, it's very difficult to sell. It's not very difficult, but it is difficult to sell. It's not as easy to go long as short, because like 99% of everybody is always long in this market. So we might spike down, and if we establish ourselves below this level, then yes, I think we can drift even lower, maybe down to 8,961, which is this low here created on the 30th of November. Here is crude oil. And crude oil had, we're working with a nice uptrend here. I don't know if you've been following, guys, you've been following me, but before the Christmas break, I said, if we trade to the upside, go long, and for this to head to the upside, which it did. And the last setup was buy here at 62.59 for this to head to the upside. It did go up to the upside. So up here, because we're so far away from this low, it's actually a level where people book profits. Or if they want to look for this to trade to the upside, because I do think it can go higher, then they would just keep, but they wouldn't necessarily be adding. Even though if you look here, it is trading above the high created here on the 10th of January, so most likely there are people that are short and they have stop loss orders on the other side. So what could happen is that we could have some sort of a breakout, so it goes to the upside like this and then slowly moves to the upside. But unless one is already long from the breakout levels down here, then I personally think it doesn't make too much sense, because every time we trade, we need to take into account where we're going to put our stop loss. And if we go long right here, the last low is down here, and that's 4% lower. So the only time that makes sense is if we personally think, or if we think we're gonna rally with another 4% as a minimum, which means the price would need to go up to, I think, about 66.25 or so. Yeah, 66.30, which it may happen. I mean, the next resistance level is 65 and then 67.12, but and it is a very strong trend. But if you've done this for quite a long time, you probably know that you'll have these moves, and it's fine to get in the beginning of it, but eventually you will have some sort of correction. I mean, Bitcoin is a very good example of that. So I wouldn't buy here. I would wait this for move to the downside, maybe down to 62.33, and then maybe from these levels turn bullish. And I do think people are having stop loss orders just below this level, around 61. Here's the price of gold. And gold rallied strongly over, well, since December 12th, and then it did try to breach above these highs here, but it's always failing. Well, it failed at least 2 times. Why? Well, because it has, again, people, if they're buying, stop loss orders potentially would need to be down here. Can of course be placed here if you want to as well, because you can treat this as some sort of a range. But I personally, I don't really have a strong view here, except that it is trading sideways, and you'll see that on the daily. Um, it's converging, and I think we're gonna have a nice breakout here at one point, but probably not now. I think if anything, as long as we capped by this high, I think this market can drift to the downside, maybe 1280 or something like that. And then the alternative is to break to the upside. But again, we already tried that 2 times. It hasn't actually worked. So you need to be very, very careful with this. And here is the German DAX. Now, I'm going to give you a little tip. This is a very volatile market. When it trades well, and it's amazing. And obviously, you can buy on a dip here. The market moved all the way up to the upside, took out that high, and now I think it's going down to the downside again. It may be around the lows, maybe like between the 61 and 50% correction level. It makes sense to actually turn bullish again. With stops below 12,732. But I don't actually trust this market too much. And so my tip is really maybe focus on the S&P 500. Obviously, the S&P 500 is short-term overbought, so you do need some sort of pullback there. But you can also check out something differently. How about the Japanese stock market? That is looking really interesting as well. And the reason why I like these two, and in particular the S&P, is that the S&P is behaving so nicely. It's a nice uptrend. It goes down to support, people buy, and then you have a breakout. You add a little bit more. It's been doing this since since Donald Trump got elected. And yes, it will stop at one point, but seasonality effects and things like that do suggest that maybe this will taper off that nice move, maybe by May, or maybe before that, March, May, and then you get into the boring season, which is the summer season, when things just become really choppy, and then we just ignore stock markets until the fall again. Okay, let's see here. We do have some people here in the chat room, and it's really good to see you guys here. So we got Brian here. So Brian, where are you based? If it's 1 a.m. where you are. I'm based in London, of course. Here's at 9:15. It's good to see more and more people here. If you guys remember me from Daily FX, we used to have 300 people joining us every morning, and I guess we're definitely going into that direction, but obviously not there yet. Okay, if we don't have any more questions or anything else, I think we're gonna wrap things up. I want to thank everybody that is watching and everybody that's watching the recording, which is usually what a lot of people do. Please don't forget to like the video on YouTube, and you see this little button here. There's a subscription button. It's a good way of actually linking up, because you'll get a notification when we do any videos, and as well you get these reminders if you want to join these webinars. So don't forget to subscribe. Again, don't forget to like the videos, don't forget to retweet, and don't forget to come back. I hope to see you guys tomorrow at the same time here at the live trading room at tradecaptain.com. Have a great day. Thank you.